Imagine this. You start with $10,000, and in just a few years, you turn that into $40,000. Sounds too good to be true, right? But that's exactly what happened to me. And today, I'm going to show you how I grew my wealth by 300%. And here's the twist: it didn't involve risky stocks, flashy crypto, or any get-rich-quick schemes. The secret was investing in hard assets. Stick around, because I'm about to share the exact strategy that worked for me, and you can start using it today. What are hard assets? So, before we get into how I grew my wealth, let's first talk about what hard assets are. Simply put, hard assets are physical things that hold value and typically increase in value over time. Think about things like real estate, precious metals, like gold and silver, and even things like farmland or valuable collectibles. Why are they called hard assets? The term comes from the fact that they're tangible. Unlike stocks or bonds, which are essentially pieces of paper or digital records, hard assets are real, physical things you can see and touch. And what makes them so attractive to investors is their ability to hold value, especially when the economy is unstable or inflation is rising. For example, when inflation rises, the value of money declines, but hard assets, like gold or real estate, usually go up in value. That's why they're often seen as safe havens in times of uncertainty. Why hard assets are the key to growing your wealth. So, let me explain why I believe hard assets are the key to growing your wealth, especially by 300%. Over the years, I've learned that these assets give you something that most investments can't: security. You see, when you invest in things like stocks or cryptocurrencies, you're putting your money into something that can go up or down in value depending on market trends or news headlines. But with hard assets, the value tends to rise more steadily over time. Let me give you an example. Take gold. Over the last 50 years, the price of gold has steadily increased. While it does experience short-term ups and downs, the long-term trend is clearly upwards. This makes gold and other hard assets reliable investments. Now, I'm not saying you should put all your money into one asset. Diversification is important, but what I've found is that by focusing on hard assets, I've been able to protect my wealth and watch it grow year after year, even when other investments were struggling. My personal journey. Let me walk you through my personal journey of growing my wealth by 300%. A few years ago, I had saved up around $10,000, and I was looking for a safe, smart place to invest it. I had tried a few different things: stocks, mutual funds, even some risky startup investments, but I was always worried about losing my money. That's when I discovered hard assets. I started by investing in real estate. I bought a small rental property in a growing neighborhood. It wasn't the most glamorous property, but it was in a location with strong growth potential. Over the next few years, I saw the value of that property rise significantly. Not only was the property appreciating in value, but I was also getting rental income every month. This gave me cash flow to reinvest into more properties. Next, I turned to precious metals. I started with small investments in gold and silver. Over time, as the economy fluctuated, I watched the price of gold steadily climb. And while the real estate market had its ups and downs, gold always held its value. I didn't stop there. As my wealth grew, I started to diversify into other hard assets, like farmland and collectibles. These assets also appreciated over time, adding to my overall wealth. How you can get started. So now you're probably wondering, how can I start investing in hard assets? It's easier than you might think, and I'm here to give you a roadmap. Real estate. Start with a small investment. You don't need to buy a mansion or a commercial building. Look for properties in up-and-coming neighborhoods or areas with strong rental demand. Websites like Zillow or Realtor.com can give you an idea of property values in your area. Make sure to do your due diligence and learn the basics of property management, or consider working with a real estate agent if you're new to the game. Precious metals, gold, silver, and even platinum have been trusted stores of value for centuries. You don't have to buy a whole bar of gold to get started. Start small by purchasing gold coins or silver bars. There are many reputable online dealers, and you can even buy precious metals through a retirement account if you want to get a tax break. Farmland. This might seem like a big step, but fractional farmland investment platforms allow you to invest in farmland with a relatively small amount of capital. Farmland has historically been a strong performer during economic downturns because people will always need food, so it's a pretty safe bet. Collectibles, things like vintage cars, rare watches, and even art can also qualify as hard assets. Now, this is a niche market, and it requires knowledge and research, but it can be a fun way to diversify your investments. If you're passionate about something like cars, art, or sports memorabilia, then this could be a great way to grow your wealth. The most important thing is to start small and gradually build your portfolio of hard assets. Don't rush into it. Do your research, stay patient, and let time do its magic. Risks of investing in hard assets. Now, I know what you're probably thinking. Are there any risks involved in investing in hard assets? And the answer is yes, of course. Nothing in life is without risk. Real estate, for example, can be expensive to maintain. You have to deal with property taxes, repairs, and sometimes tenants who don't pay. Precious metals can be volatile in the short term, even though they tend to rise in value over the long term. Collectibles can be hard to sell, and they require specific knowledge to buy at the right time. But here's the key: hard assets are less volatile than other investments. While there may be bumps in the road, the long-term trend is generally positive, and by spreading your investments across different types of hard assets, you can reduce your overall risk. The other risk to consider is liquidity. Hard assets like real estate or farmland can take time to sell if you need to access cash quickly. So, make sure you have enough liquidity in other investments or savings accounts to cover any immediate needs. Final thoughts and tips. To wrap things up, I want to emphasize a few key takeaways. Hard assets are a reliable way to grow your wealth. They provide long-term security, even during tough economic times. Diversify your investments. Don't put all your eggs in one basket. Mix real estate, precious metals, farmland, and even collectibles to protect your wealth and increase your returns. Start small and be patient. Rome wasn't built in a day, and neither is a strong investment portfolio. Take your time, do your research, and watch your wealth grow. By following these principles, I was able to grow my wealth by 300%. It didn't happen overnight, but with the right strategy, hard assets can be one of the smartest ways to build long-term wealth. Thanks for watching. I hope this video has given you some valuable insights into how you can grow your wealth by investing in hard assets. If you like this video, don't forget to hit the thumbs up and subscribe for more tips on investing, personal finance, and growing your wealth. Have any questions? Drop them in the comments below. I'd love to hear from you.